Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the markets today, we had a Jewish holiday and we also had the end of the quarter. So all in all, it was a fairly low volume day. The volume really ticked up in the last half hour of trading. Aside from that, it was a lot of daily inside bars out there. And when we have daily inside bars, we know ranges will be tight, volume will likely be dropping off, and we'll be watching to see how the daily inside bars break tomorrow to dictate short-term direction. So SPY, we have four tops the last 4 days, all relatively close to each other, pretty much within a 25-cent range between 297.86 and 298.11. So we're going to be looking for the bulls to break that level. What stands out to me is the bear break on Friday with no follow through right now. So as we know, the bears have to prove, if we're going to lose the weekly uptrend and not just form a weekly high or low, we need significant bear volume and we need proof. Bears, the burden of proof is on your shoulders, and we're just not seeing it on a day like today when the bulls recover so well. After hours right now, the market is trading a bit higher, 297.44, so we're right at about the high of the day, and we had an hourly higher low in the afternoon, and then the bulls tried to see continuation. So we have to break the high of today tomorrow to confirm this hourly trend change on SPY, and then we're looking up at the 298, what level was it? 298.11 as the short-term resistance to get over. So what stands out and what we're going to gauge to determine whether the S&P 500 bulls can recover, IWM has been weaker. Does that mean that when IWM bulls show up, that they're going to only help the S&P 500 bulls head back to recent highs? Or is IWM giving us a little bit of a precursor as to what to expect? In my opinion, I'm going to be watching. Really, honestly, IWM doesn't really do a whole lot for me as far as giving insight or any clues or anything like that. I treat it just like everything else, and honestly, it's less important to me than QQQ, XLF, and XLV. I rank it number 4 as far as what I consider important. It gave us a daily inside bar as well. We've been pulling back very consistently for the last 2 weeks, but it's also been fairly contained. It's not like we're dumping. There's no big bear volume. So again, we're just looking for a weekly higher low to form compared to 144.25 at this point. QQQ daily inside bar, little double top the past couple days right around 190, but we need that hourly trend change. Closed with a higher high at the end of the day. We're higher here after hours. And again, bear break on Friday, no follow through right now. And anything on the daily chart under 191.79 is just a lower high. But at this point, it's a bear break with no follow through. XLF, the most important level for me is 27.78. And that's a line in the sand level for me, where I can say that if that level does not break, that the S&P 500 is going to hold on very strong. If that level breaks, it's a very clear confirmation of a daily downtrend on XLF with a lower high and then a lower low. That's when the door opens up to say, okay, we can head back down to our August lows in the broader markets if we are going to see the financial sector, which has been holding things up the last 5-6 days. If it's going to drop down to lower lows and start entering this area in the mid to lower $27 range where there is a lack of support, that definitely gives the bears a glimpse of hope that they don't currently have, in my opinion. So that level is very important for me. And again, it's nice and defined, whereas SPY and QQQ dropping to lower lows, we don't have a straight across defined support level like we do there. XLV, watching to see if this is going to be a bear flag. We are bouncing. Anything under 92.43 is just a lower high. But if this is as far as the bounce goes, we have to be cautious of a bear flag on the daily chart. Hourly higher low of 89.89. Bulls are looking for a higher low compared to that level. And again, we have to break the high of today tomorrow if we're going to negate the possibility of a bear flag. If we cannot break 90.68 from here, the daily bear flag remains a possibility, and we're still looking down at the weekly August low of 88.19. Again, just like XLF breaking that daily level, if XLV, the healthcare sector, breaks 88.19, being the third largest holding in the S&P 500, that would definitely increase the odds for me that we are going to see SPY head back to August lows. So again, it's just a probability needle, and all of these little clues are pieces to the puzzle, and if XLF breaks that daily support, the probability of SPY heading to August lows increases. And if XLV breaks its weekly low, it increases even more. If neither of those happen, the probability remains with the bulls to form a weekly higher low. That's how I view markets and probabilities. I've been dealing with probabilities. They used to call me the weatherman in high school because I would dish out probabilities that we'd have school canceled when it would be snow days. So probabilities are important to understand. And that's, again, I think the best way to be viewing how markets work, pricing in certain future events. XBI is still very weak. We did get a little bit of a bounce, but it's just an hourly lower high. I am interested in a daily bounce here because we have pretty much fallen off a cliff over the last week of trading. The daily RSI is on the verge of oversold. Every day has been a lower high and a lower low over the last 7 days. So if we change this hourly trend, tomorrow morning, I want to see a hold of 75.62 and a break of 77.13. If we get that, we're just going to zoom out and look for a daily lower high to form, similar to what the healthcare sector did today with its bounce off of a cliff, just a bounce for a lower high, but there's a lot of gains there. And if that happens in the biotech sector, the leveraged bull, LABU, could see some decent upside. You know, if we were to bounce here from where we closed on XBI and just look for a lower high to form, we could see an easy 6 to 8% on LABU. So it is something I'm watching for. It will be a top watch for me tomorrow. If the S&P 500 breaks bullish and the biotech sector can change this hourly trend, we'll look for that short-term bounce and play. The VIX is a daily inside bar as well, closing at the low. Most important short-term level is 1520. Again, the bulls want to just see these higher lows sustained. And if we break that support, if we look at it on a different perspective, here's the 3-day chart. Let's see if the 2-day is better. So just the 2-day chart with our high, low, lower high, lower low, lower high, lower low, lower high. Are we going to drop to a lower low is the question. And the odds that we will increase if we break 1520. If that level holds, then the bulls keep control of the VIX as far as the short-term action over the last trading week or two. Gold got a clear bear break under 1483 double bottom. We are now in a weekly and daily downtrend, lower highs and lower lows. There is a lack of support in this general area aside from 1479, which already broke. There's no support as far as established clear levels. So now we are looking at monthly consolidation underway, and we're going to look for a monthly higher low to form compared to 1266, but we could pull back another $100 before we find that monthly higher low. So the momentum has shifted. The bear miners now have momentum in their favor as long as gold is in a daily downtrend. When gold does bounce from here, we will just be looking for a daily lower high to form because anything under 1536 is a daily lower high. The 4-hour time frame is due for a bounce. We're oversold. But again, same thing. We're just looking for a 4-hour lower high compared to 1503. And the bears are looking for entries every lower high, which means the bear miners are looking for higher lows every time we get a bounce. And if the S&P 500 bulls, really we have the dollar strength. Let's point out the dollar strength. The dollar is trading at 2.5-year highs. And as long as that's the case, there's extra pressure on commodities. And if we see the dollar, the next level that we're looking up at is 15-year plus highs at 103.82. So the dollar is extremely strong. And if we want to see a sustained breakout on gold with significant follow through, in my opinion, it has to be market weakness and dollar weakness in order to see that as far as very significant moves. We already got our equilibrium on the monthly breaking out. The bull miners and precious metals definitely saw upside, but the dollar will have to lose the weekly uptrend at a bare minimum in order to see gold really see some strength. But anything above 97.86 is a higher low, and the dollar bulls are comfortable right now. So gold is in a downtrend on the daily and the weekly. Silver is as well. Silver's given back a lot from that top, and at this point, we pulled back 14%. The next support level is down at 1692, which we are approaching, and then 1683 as the level after that. And again, getting due for a bounce on the daily, but we will just be looking for a daily lower high to form on that bounce. And there will be bears who maybe didn't make an entry yet looking to enter on those daily lower highs. Bull miners, they had a bounce off 2811 support, NUGT did right at the start of the day. It was short-lived, but nice 20-25 minutes where we held that bottom fishing level by 20 cents, and we ended up going 6% from the low of the day to the high of the day. From there, the red flag was the higher low, lower high, bear break. There's your red flag, and we dumped from there. So we didn't end up holding support. It's a bear break to a lower low, but if you look at the bear miners, we have not broken resistance yet. Why is that? Time decay. Time decay on these leveraged ETFs is definitely notable, which is why I prefer to chart the non-leveraged versions without the time decay. We can look at GDX here and see it's a double bottom still at this point, 2660 and 2654. We need another red day for a very convincing bear break. Otherwise, I would consider that a double bottom, and then we would be looking for a daily lower high to form. It's a weak bounce attempt. It's a bear flag on the hourly at the end of the day. The bears have momentum in their favor, but the bulls do still have a chance tomorrow to potentially defend that double bottom. If they do, we'll just be looking for this tightening range and again, a daily lower high. If they don't, it'll still be notable that the bear miners will then be looking for follow through. The miners have given us a clue, and there's a lot of metal traders do look for the miners to be a little bit of a canary in the coal mine, as far as canary in the gold mine, as far as an early indication. And we lost the weekly uptrend on these bull miners 3 weeks ago. And we did not see that weakness in the precious metals until just recently. So keep an eye on these miners for potential leading clues. But right now it's all about GDX and a key support test tomorrow. Oil is still just struggling. The entire Iran move has been given back. And we are now looking at the weekly higher low of support down at 52.90 or 52.82. And unfortunately, we had a really nice equilibrium that's gone out the window because of this news bull break and then the news dump giving it right back. And we're right back in the middle of that range. So that is not the kind of break that you want to see from a tight pattern. And the 4-hour time frame has just been the guide. We have not changed the 4-hour trend. Every bounce is just a lower high and lower low. And even right now, anything under 56.40 will just be a 4-hour lower high. So bears in complete control. We're not really oversold on any time frames, and it's worth watching for when that 4-hour trend changes, but there's no sign of it in the near term. Natural gas made a play on natural gas for an oversold bounce today and bailed break even. So we have ended up following through in a big way for the bears ever since 251 support broke, and we're looking for the weekly higher low to form. At this point, we're definitely looking for an equilibrium best case for the bulls. The continuation move is out the window, in my opinion, as the least likely scenario, because we have our low, high, haven't even set our higher low yet, and we would already need, if this was our higher low, we would need an 18% move to see continuation, and we may not be done pulling back yet. So why did I enter into NatGas? I entered pre-market because, number one, the 4-hour RSI was oversold and in the low 20s. Number two, hourly RSI was down in the teens. The 15-minute RSI was down in almost single digits. So I said, all right, I will enter my first position pre-market in UGAS, and I will enter a second position if we do not see RSI cool off. So entered my one position, ended up in some profit, didn't hit a day maker or anything like that. I was looking for a 15-minute trend change. So high, low, lower, high. As soon as I saw the size of this pullback from that 15-minute bounce, I said, okay, that is now the most likely scenario is an equilibrium as opposed to a 15-minute trend change and bounce continuation. So I exited break even on this little move because it was not the setup that I wanted, and I did not trust. Well, really what it was is I did not want to sit through a 15-minute equilibrium tightening all morning and then hoping it gives us a bull break. So the bears are still in control. I will be interested in natural gas again tomorrow because the 4-hour RSI is close to the teens. If the 4-hour and hourly RSI have cooled off by morning, I won't be interested in looking for a bounce. But that is what has my eye right now, and we'll see if that setup is there tomorrow morning. But that's just an example of keeping a loser small as opposed to being in a swing position now that I didn't want to enter because I didn't respect any stop loss. I would have to be watching the price of natural gas overnight. It would definitely be the first thing I think about when I wake up tomorrow morning and check my phone to see where the price of natural gas is. Or I can recognize this is not the bounce that I'm looking for. We have pulled back too much, and just give me my money back, please, and I'll try again maybe later. And that's the best way to view the market and to prevent from bag holding and being in spots where losses can accrue to much bigger sizes than you had hoped. And again, the worst case, let's talk about the psychological burden of having to be in a position you don't want to be. I'm in the red. I'm swing trading natural gas. I don't want to be in this position. I have to check what the natural gas futures are doing. Maybe when I'm out to dinner, again, first thing when I wake up, it's on my mind. That's just not a healthy way to trade longer term. And in my opinion, cutting that out of the equation and limiting the psychological impact that things have. I like to have the bell ring and then I'm done. As soon as I make these videos, done with the market until I open my computer tomorrow morning. I don't care what happens in the meantime. And that's why I prefer day trading personally. So thanks for tuning in. We will check in tomorrow and see how these daily inside bars break. There's a lot of them out there. Amazon and Facebook are in weekly downtrends in the tech sector. That increases the odds a little bit that we may see SPY bears get a little bit more follow through. So weekly lower high and lower low on Facebook and on Amazon. But in the tech sector, offsetting that, Apple bulls are on absolute fire with a clear daily baseline of support at 217. And we're heading up to the highest price we've seen in months. And then we're looking at all-time highs in Apple. So Apple's strength and Google's strength is offsetting Amazon and Facebook weakness. So things definitely getting interesting, but it'll always be the burden of proof is on the bears until we're in a weekly downtrend, and we're certainly not at that point right now. Thanks again. Do good things. We'll see you next time.